Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. It's Wednesday. We're having an update on the stock market. Dow Jones up about 250, NASDAQ up about 200. Now, we were down yesterday, and now we're recovering the losses that we had yesterday. We're sitting right on a critical support level, and that's the 50-day moving average. The SPY sitting right at the 50-day. It could break either direction. If support doesn't hold, we're going to go lower. We could have a little bit of a bounce from here. Now, what we got is a bunch of gaps. Now, a gap happens when the stock market opens higher than it closed at the day before. It gaps up. Or when the stock market opens lower than it closed up, that's a gap down. Now, typically, you go back and retrace. You go back and fill the gaps. Now, nothing goes straight up. Nothing goes straight down. Now, right now, we have two gaps right above where we're at. And we'll probably get a little bounce up and fill those gaps before we go down and test the recent low. You see, there's a big gap right down at the recent low. And I think we're going to eventually get back down to those levels and retest it. Now, if we do bounce up from here and fill those two gaps, I think it's time to short the market. If we come down and test the recent low and fill that last gap down there, I think it's time to buy the market. Right now, we're kind of in this no man's land. We're getting a little tug of war between the bulls and the bears. It's very exciting. We're sitting right on that 50-day moving average. We'll see which way we break. My guess would probably be little bounce up, fill the gaps, and then come back down, test the recent lows. All right, let's move on to the real estate market. Now, real estate's very fascinating to me, and we're in a mess. We're in a mess. Okay, now people ask me the question all the time, well, Mike, how long is it going to be before we get this market crash? And the other question I get is, well, how low will prices really go? I mean, 10%, 20% correction, no problem. And that's all would be all fine. Now, what I'm saying here, look, it's just my opinion. Now, I am a real estate broker, full disclosure, and I am an economist. Now, I'll be the first one to admit to you that economists, they don't know anything. And real estate brokers, they know even less. But I am one of each, and this is my opinion. And here's what we got. Here's how we got into this mess, right? Okay. So you can go all the way back to 2007, 2008, right before the great financial crisis, and that was brought on by the subprime mess. Home prices came down. They actually dropped 34%. 34%. Okay. Well, that's interesting. All right. Well, why didn't they drop more? Why didn't they go down 50%? Well, the Federal Reserve came in with the printing of money. We printed in 2009, we printed $3.6 trillion. And this is the way we reinflated the bubble. You see, the bubble's bigger now than we were back in the financial crisis. The real estate bubble has gotten larger and larger, and we've done this by printing money and keeping rates at an artificially low level. Look at the printing of money. Just in the last 2 years, we printed $5.6 trillion. Now, that money's got to go somewhere, and it usually goes to wealthy people, and wealthy people usually buy things like real estate. So the real estate bubble gets larger and larger. Now, what we have in the current situation where we're at right now is we have home sales already starting to plunge. Now, not prices. I'm talking about the actual sales, the number of sales, the volume, if you will, of real estate transactions. It's starting to plunge. It's starting to go down. And it's going down for, well, one very obvious reason. People cannot afford to buy homes, right? I mean, that's pretty simple. I mean, the affordability has gotten out of reach for basically about 90% of Americans cannot afford to buy a home right now. Okay, so we got the affordability factor, and this is what's causing the problem today. Now, here's where it gets a little bit scary, and I don't mean to scare anybody, but what we have right now is these plunging home sales. The number of sales is way down. Even new homes are not selling. They're not selling. People are backing out of contracts where they had already purchased the home and their home's being built. They're saying, no, I don't want to buy it anymore. The home sales are plunging. Even new homes, they can't get them sold. But here's the thing. The Federal Reserve is being forced, literally forced, let me explain that in a second, to raise interest rates into plunging home sales. It's like a terrible time to do it, right? I mean, home sales are plunging. You got to lower rates to get people to be able to afford it, right? Well, they're trying to get that with the 40-year mortgage, the 50-year mortgage. They're trying to get the affordability, but they have to raise interest rates. And this is making them less and less affordable. Now, when you you got home sales plunging and you have to raise interest rates, you have a major problem, right? Okay. Now, the reason they have to raise interest rates is because we got runaway inflation. Okay. Well, we have just had the inflation numbers come out. The consumer price index, that came out at 8.5%. So that's 8.5%. And this is just the government numbers. But the producer price index came out today, okay? And that was 11%. Now, these are the government numbers. The government is admitting that we have 11% inflation. And me and you, we know it's closer to 20%. Now, how do we know that? Well, we go to the grocery store. We put gas in our cars. It's closer to 20%. And it's going to get worse. The inflation's going to get worse. Okay, so they have to raise interest rates. They're forced to raise interest rates. And they're raising it at the time, a terrible time, when houses are already, sales are starting to plunge. Okay, now real estate itself, worldwide, it makes up 60% of the wealth. 60% of all the wealth in the world is in real estate, okay? And this real estate is in this bubble. Now, real estate also makes up 30% of the GDP. Okay? It's 30% of the GDP, 60% of the wealth. Now, when you are raising interest rates into plunging real estate sales, you are going to do one thing here. You are going to cause a worldwide recession. A worldwide recession. Now, I use the word recession because, in my opinion, we're probably already in that recession, and we're probably headed for a worldwide depression. And people hate when I say this. People can't believe it, and I don't want to believe it. I hope I'm wrong. I'm pretty sure I'm not wrong, though. That's the problem, right? Okay, so we might get this. Well, we're definitely going to be in a recession, okay? And that's going to be within the next 6 to 12 months. 6 to 12 months, we're going to be in this worldwide, not just U.S., worldwide recession. And it really could become a depression. Okay, it could become greater than the Great Depression. Now, I actually think that, the great financial crisis where we had the subprime problem and houses only came down 34%. Now, if you go back to the Great Depression, they only came down 26%. But in the Great Depression, houses weren't financed with debt. They were financed with money. People bought their homes. People owned their homes. They didn't have big mortgages. If they had a mortgage, it was no more than 50%. Now our mortgages are 90, 95%. So we have all of this debt in this housing market. So I believe that the financial crisis that, we saw in 2008, 2009, that's going to look like a picnic compared to what we got coming. Now, in that picnic, we did drop 34%, but then the government printed that $3.6 trillion in 2009 to get us out of that. And they've had stimulus packages all for the last 10 years. And just in the last 2 years, because of the pandemic, we printed $5.6 trillion. Okay, so this bubble has gotten huge because that money has to go somewhere. But now the Federal Reserve has a huge problem. Okay, either you're going to get runaway inflation. In my opinion, inflation's already running away. They're admitting 11%, meaning it's 20%. But what if we go into hyperinflation? That would just destroy the country. It would destroy the country. Right now, it's just like a 20% tax to me and you, a 20% tax on everything, a 20% tax on everything you buy, a 20% tax on everything you have saved, and a 20% tax on every dollar you make. It is the everything tax. That's what inflation is. It's terrible. It's the worst thing that can really happen to a country. It really is. Basically, if we get hyperinflation, though, we're going to be a nation of broke millionaires. We're all going to be millionaires, but it's going to cost $1 million for a loaf of bread. So we're going to be broke millionaires. Look, they have to raise inflation into this. I mean, raise interest rates into this inflation, and inflation's just running away. So they got to bump up the interest rates. They have to do it. And they don't have a choice. They can let inflation run away, and we can go hyperinflation, and we can go that way. And sure, maybe that will keep home prices from dropping. But no, they have to raise interest rates. Now, so far, they've only raised them 1/4 of a point, and we've already got home prices plunging. I'm telling you, interest rates on mortgages now are 5.25%. 5.25%. We're headed to 6, and it's not going to stop there. I mean, this is scary stuff. I'm telling you, look, if you don't have to buy a house right now, hold off. I mean, I'm not saying to sell your principal residence. I'm not. I mean, some people will, but I'm not doing it. That's not my plan. You need somewhere to live. But prices in houses are going to feel a lot of pain. I mean, they're going to come down, and it's not going to be 26% like the Great Depression. No. It's not going to be 34% like the Great Financial Crisis. No. It's going to be half off, 50%. I want to be wrong. And people say I'm negative on real estate. I really don't think I am. I love real estate. My life has revolved around it. It's where I made a lot of money. But times were different then. Times were different the last 40 years. I mean, interest rates have been coming straight down. Prices going straight up. And there's going to be opportunities again. In the next year, maybe 2 years, let's call it, what are we at, 2022, right? Maybe in 2024, there's going to be some fabulous buying opportunities. There really is. So it's not all that bad. I mean, it's just that we built this house of cards thanks to the Federal Reserve printing all this money. And I'd like to end the Federal Reserve, but that's a whole nother issue for another time. But look out. Just be cautious. House prices are coming down. Stock market's going to be coming down too. We're headed into that recession in 6 to 12 months. Guarantee you a recession. I really believe it's going to be a Great Depression, greater than the last Great Depression. Didn't mean to make anyone sad here. It's a Wednesday. It's a good Wednesday, Get out there, have fun. That's just my opinion. I'm Tall Mike. You like this stuff? Give me the thumbs up. We'll talk again real soon. I appreciate all of you. Bye-bye now.